Hello and welcome to the Deep Dive. We are live. It is Monday, March 21st. Happy spring, everyone. My name is Kate Rezabek, and we're here with Keeping Current Matters to bring you the number one topic you need to know about in the housing market today. And today we're going to be talking about mortgage rates. We know they're on the rise, so that's going to be our big focus today. But before we dive in, I certainly want to welcome everyone here. Thank you to our members who come back week after week and join us. The best way to start off your Monday with the latest in the housing market. So thank you for being here. And if you're new to KCM, thank you as well for hopping on, for joining us, for checking this out. You know, no matter where you are coming in, logging in from today, we want to hear from you. So pop into the comments, tell us where you're watching from. We're just so happy to have everyone here and to talk about mortgage rates. Mortgage rates are rising, I said a moment ago. And you know, we've seen them tick up over 4% for the first time in almost 3 years. So big topic of conversation. If you know someone who needs to hear about rising mortgage rates and what that means for the housing market, tag them in the comments as well. They can join us and watch live, or they can watch us on demand as well. So many ways to absorb some great KCM content today. And of course, slides are always available. So members, you can go into our member area and download all the slides that I'm sharing with you today. Or if you are not a member, head over to trykcm.com and you can download those slides as well. So Jessica's going to be popping a link in the chat for you today, so you can go right to that source and see the slides that we have today, customize them, use them in your social media, share them with your clients. You know, the best thing we can do right now is get the knowledge, the data, the insights that our research team has vetted through for you, to share that out so you can be the knowledge broker in your market. You can help your clients make powerful and confident decisions about, you know, what's happening, especially as we go into the spring housing market. So many great things that we're going to be sharing with you today, and I want to make sure that you have access to those. Of course, if you have questions that come up through our deep dive this morning, be sure to pop those into the chat, and we'll try to answer what we can as we get to the end of our time together this morning. So again, I'm thrilled to be here with you. Glad to have you all here. We are going to get started in just a moment. So I'm going to go ahead and share my slides so you can see what's coming today. So we are going to be talking about the impact of rising mortgage rates on the housing market. So what's happening with mortgage rates? Where are they headed? And what is the message that you need to share with your clients so they can make those powerful and confident decisions? So what I want to do is start off with this first slide right here. We have mortgage rates exceed 4%. Now, this is data as of March 17th, 2022 from Freddie Mac. So, before we dive in and look through this quote, I want you to look at the bottom of the screen where it shows the 30-year fixed at 4.16%. So this is kind of a big deal. And, the reality is that many of you may be seeing rates being quoted to you higher than that by your lenders in your market. That is entirely possible because we always bring you the latest data from Freddie Mac when we follow this percentage. But it is it's a look back as well. So the data, the 4.16% 30-year fix that we're sharing here today was released last Thursday, March 17th, but it's a look back. It's an average from their survey from March 10th to March 17th. So although it's the latest we have to share with you, there's a good chance that you're seeing something different as well, entirely possible. So, today we're looking at 4.16, and this quote from Sam Cater says, the 30-year fixed rate mortgage exceeded 4% for the first time since May of 2019. So that is almost 3 years. The Federal Reserve raising short-term rates and signaling further increases means mortgage rates should continue to rise over the course of the year. We're going to talk about that a little bit more today. And while home purchase demand has moderated, it remains competitive due to low existing inventory, suggesting high house price pressures will continue during the spring home buying season. So mortgage rates are rising, they're projected to continue rising. And what we want to do today is put that into context for you and kind of break down what that means. So let's take a look at what's been happening with mortgage rates since the beginning of this year. So says mortgage rates are climbing this year. Again, this is the Freddie Mac 30-year fixed from January of 2022 all the way through today. It's a week over week look at what's been happening with mortgage rates. You can see at the beginning of the year, we started at 3.2%, roughly in that range, and it's been pretty much climbing ever since. So almost a full percentage point higher today. You can see there was a little bit of a reprieve in early March. A lot of that had to do with the uncertainty in the market. Anytime there's uncertainty, this is what we tend to see. There was uncertainty with, the conflict between Russia and the Ukraine. There was the anticipation that the Fed was going to raise rates as well. So we saw a little bit of a reprieve and then jumped right back up as of March 17th. So, we said for a long time, we've been telling you this was coming. So hopefully this jump up in rates isn't a surprise. We've been looking at this information month after month, week after week, and, we've been following what the experts are projecting. So here we are sitting at just over 4% right now. And I want to walk through a little bit on why we're seeing that. When we are talking about mortgage rates, there's a very strong relationship between the 10-year Treasury yield, which you can see here, and mortgage rates. And when the Treasury yield tends to come up, come down, mortgage rates tend to follow. And that's because we've been following, for 50 years, we've seen this relationship between the two. So one doesn't necessarily dictate the other, but mortgage rates tend to follow the 10-year Treasury yield. So what we can see is with that uncertainty in the market towards the beginning of March, you can see where the Treasury yield dipped down in that March of 2022. But mortgage rates did as well. And then mortgage rates have started to follow as the Treasury yield has been rising. So as we talk about where are rates going into the rest of the year, we're following expert projections, and we're looking at this as a leading indicator for something that might tell us that story. So we're going to continue to bring this information for you so you have a really solid look at what's happening with mortgage rates. And of course, we always look at what the experts are saying as well. And this quote from Realtor.com that just came out last week says, in short, I expect we will continue to see mortgage rates climbing in the months ahead, as they are likely to pass 4.5% before year's end. So mortgage rates are projected to continue to rise. Now, you may be seeing, as I mentioned a moment ago, a little bit above 4.5, a little bit below, somewhere in there. But the general trend is exactly what we've been sharing with you for months now, that mortgage rates are projected to rise. Now, people always ask, what does that mean for affordability? And we know that affordability has three levers. It's prices, mortgage rates, and wages. And when you start to hear that mortgage rates are ticking up, you start to, hear prices are still rising. We know that home prices, because of today's supply and demand, are projected to continue rising as well. People want to know about affordability. Well, homes, we've been telling you for a while, homes are less affordable, but not unaffordable. So, it's not as affordable to buy a home as it was a year ago when mortgage rates were hovering, really at historic lows. But because wages are rising in many parts of the country as well, that's helping to keep homes in that affordable range. So the family making the median priced income, purchasing the median priced home, according to lending standards, is still generally in that affordable range. So, as mortgage rates are rising, as prices are rising, we take all three of those levers into consideration, but we want to make sure people hear the message to buy before prices and rates rise higher. And that's kind of what we're going to talk about today as we go through that conversation, because that tends to make homes more affordable before more of those levers go up on the affordability equation. Now, one thing we love to do at KCM is make sure that we put everything into context for you. So let me show you this next slide that shows today's mortgage rates are actually comparable to what we saw in 2018 and 2019. So the blue bar that you can see over on the right, that 4.16% is what's being reported out by Freddie Mac today. And when you look at the average for 2018 at about 4.5%, 2019, just under 4%. We're really sitting in that same zone as where we were prior to the pandemic. Now, what I want to remind everyone is 2018 and 2019 were great years in real estate. So, demand was high, homes were being sold. We still have really high demand in today's market. People's needs are changing. They want to buy homes. They want to move up. They want to downsize. They want to get ahead of rising rates and prices. So, we can still see that we're sitting in a spot where we had two very strong years in real estate in 2018 and 2019 when it comes to looking at mortgage rates. So some experts may be projecting that, demand will soften as mortgage rates rise. We're hearing that. Is there a chance? Yes, there is a chance, but there's still very strong demand in the market today, even as mortgage rates are climbing. Now, I want to give you a little further context. We love this graph as well. This shows current mortgage rate compared to the last 5 decades. And that dotted line across the middle, that current rate at 4.16%, that's today. And when we compare that to the 70s, the 80s, the 90s, even 2000s, that is still a very competitive rate. So this is great context to share with your clients, to put out on social media, to, make sure that we can get this message out here that, rates may be climbing, they're still incredibly competitive, and we want to get ahead of them before they climb higher. Now, one question that people will often ask us is, when mortgage rates are rising, does that mean home prices will fall? Well, this next chart I'm going to share with you, I think you're going to find really interesting. It was vetted by our research team, put together for you, and it shows the impact of rising rates on home prices. And I want to walk you through this because I think it's really fascinating. And this is how home prices changed as mortgage rates increased by more than a percentage point. And it goes back to almost a 30-year view. So over the past 30 years, what happened to prices every time mortgage rates ticked up by a percentage point or more? So look at that first line, October 93 to December 94. That was a 14-month period where rates increased by 2.38%. What happened to home prices? They rose by 3%. So home prices did not decline as mortgage rates rose. Now let's look at the next line, January 96 to September 96, a little shorter period of time, 8 months. Rates rose by 1.2%. Home prices went up by 2%. So starting to see a pattern here. And if you go through every line, when rates rose by more than a percentage point, so did home prices. Look at October 98 to May 2000. 19 months where rates were rising, home prices rose by 13%. So, if you're getting that question of rates are rising, does that mean home prices are going to go down? Should I wait? The big takeaway is home prices are not projected to drop. Mortgage rates are not projected to drop, and getting ahead of that now is really mission critical. Now, we certainly can't look into a crystal ball and tell you exactly what's going to happen, but the data that we have that shows what's happened through history, the context that we can provide on, what happens with mortgage rates, what happens with prices. We can even look at the forecast for what's supposed to happen for, mortgage rates and prices. And we can see that buying before those rise is going to be most beneficial for your clients. So let's spend a moment on the bottom line, the big takeaways today. Mortgage rates are rising. They're projected to continue rising. Home prices are rising. We know that supply and demand is driving this, just simply not enough homes for the number of buyers who are actively in the market. That's going to continue to drive home prices up. And historically, based on the chart that I just showed you, home prices haven't dropped when mortgage rates were increasing. So the big takeaway, when you find a home to buy, purchasing it before it costs more to do so may be the most affordable option. It's getting ahead of rates, it's getting ahead of rising prices, it's really taking advantage of the opportunity to start earning equity today with a home purchase, sticking with that search and really powering through with that trusted advisor. And I'm sure you will be that person for all of your clients. As you share all this knowledge out, make sure that they can make powerful and confident decisions. So I'm going to pause right here for a moment and turn it over to Jessica to see if we had any questions that came up today.
Hi, Kate. I only saw one question come through from Stephen, who asked, any theory why prices go up with a 1% increase in rates?
That is a great question. I think initially when we see rates rise, there's people who are trying to get ahead of rising rates and want to jump in and stay in the market before it goes higher. That could absolutely be one of those reasons. I would encourage you to email me, kate@keepingcurrentmatters.com. I'll run that one by our research team and see if we can find something out for you.
Awesome. Thank you for that, Kate. And I don't see any other questions today.
Wonderful. Well, thank you all for being here this morning. Really appreciate you jumping on for the deep dive. Can't wait to see you back here again and hope you have a wonderful day.